Problem 5. The name of the company is Narendra Company Limited. Narendra Company Limited. 31st March 2018. 31st March 2018. Profit and loss account for the year ended 31st March 2018. 31st March 2018. Okay. Let's start with the schedules. The premium earned, the first thing is premium earned. So we have premium on direct business. We have premium on direct business. Now, if you see there, we have the actual premium received and we also have the outstanding. So, what I'm going to do is to avoid too many lines and too many calculations, I'm going to show it like this 24 lakhs plus the outstanding at the end of the year, that's 1,80,000 minus outstanding at the beginning of the year, 1,20,000. Okay, so whenever you have outstanding given separately like this for each one, what we had in the past, how we had got outstanding, they just had premium. We didn't know whether it was on direct business, whether it was on reinsurance. They just had premium outstanding at the beginning, premium outstanding at the end, and we added it towards the end. But here they've given specifically for each one. So I'm going to add it or minus it from each one. So this is the actual one received during the year. This is outstanding at the end of the current year. So that's why we're adding it. This is outstanding at the end of the previous year, at the beginning of the year. So we are minusing. So this will come to 24 lakhs 60,000. 24 lakhs 60,000. Okay. To this we have reinsurance accepted, reinsurance ceded. So I'm going to say add premium on reinsurance accepted. Premium on reinsurance accepted. Accepted. Again, I'm going to do the same calculation. 3,60,000 is the actual premium on reinsurance accepted that is received during the year. 21,000 is outstanding at the beginning and 28,000 is outstanding at the end. Okay, so 28,000 is outstanding at the end and 21,000 is outstanding at the beginning. So if I put this together, I get 3,67,000. Similarly, I'm going to minus less premium on reinsurance ceded. So that is 2,40,000. What is outstanding at the end? Outstanding at the end is 42,000. So added. And outstanding at the beginning is 20,000 minus it. So that comes to 2,40,000, 2,62,000. 2,62,000. Okay, so we call this, normally we call this premium earned in brackets net. So the amount here is 25 lakhs 65,000. And on this, we calculate our unexpired risk, reserve for unexpired risk. So next I say less adjustment for change in unexpired risk. Adjustment for change in unexpired risk. So we minus last year's from this year's. How do we calculate this year's? They have told us that read the problem. If you read the problem, they've only told us additional reserve has to be maintained at 5% of the net premium. Now we need to know what is the actual reserve. Okay, now go back to your theory. You know that for fire insurance or any other insurance, it's 50%. And for marine insurance, specifically, it is 100%. And right now, this problem is marine insurance business. If you see the question, and they've told you somewhere, yeah, from the following information, prepare revenue account and profit and loss account of Narendra company engaged in marine insurance business. So it's marine insurance business. So I'm going to take it as 100% plus the additional reserve is 5%. Additional reserve. So I'm going to get 105% into 25 lakhs 65,000. And from this, I have to minus last year's reserve, which they have already given. Balance of fund on 1st April 2017 was 26 lakhs 50,000, including 3 lakhs 25,000. Okay, so 26 lakhs 50,000 already includes the additional reserve. Is this clear? First, how did I get 105? 100% is the reserve that's required to be made. Why it's 100%? Normally till now we had it as 50%. Why it's 100% here? Because it's marine insurance business. 5% is the additional reserve. So when we are creating the new reserve or the reserve for the current year, it's 105% of this total premium minus the last year's reserve. So we get to know how much has to be provided for this year. So if you do this calculation, you get it as 43 250. What's the meaning of 43 250? In comparison with the last year's reserve, this is additional that's required to be provided this year. Okay, the current year's reserve will mostly be more than the last year's reserve because your premiums are increasing, right? Every year, more and more business is coming up. Okay, so we call this total premium earned. We call this total premium earned, and the amount is final amount is 25,21,750. 25,21,750. Is this understood by everyone? Is this understood by everyone? Okay. The next one is claims incurred. So the same thing I'm going to do with claims. Okay. First we have claims on direct business. First I have claims on direct business. Again the same calculation. It's going to be 16 lakhs 50,000 plus outstanding at the end, that is 1,75,000 minus outstanding at the beginning 95,000. Okay, so that comes to 16 lakhs 50 plus 1 lakh 75 minus 95 comes to 17 lakhs 30,000. Now we need to be a little careful with claims. There is an adjustment that says that there are some expenses towards the claim. Legal fees include inclusive of 20,000 in connection with the settlement of claims. Okay, so since it's in connection with the settlement of claims, add just say expenses in settlement of claims. And how much is that? 20,000. That has to be added. Similarly, we have claims like the premium. We have claims on reinsurance accepted. Okay, and that is going to be 1,25,000 plus 22,000 minus 13,000, which comes to 1,34,000. 1,34,000, and similarly less claims on reinsurance ceded, which is again 1 lakh, 1 lakh plus 12,000 minus 9,000. So it comes to 1 lakh 3,000. 1 lakh 3,000. So finally, the total claims incurred are, after doing all that calculation, it's 17 lakhs 81,000. Okay? So whenever there are costs which are directly related to the claims, you need to add it to the claims, because that, like I give you the example of masonry and installation charges and transportation charges, how that's added to the cost of the masonry. Same thing here, the cost of the asset thing. Same thing here. Any expenses in settlement of the claims are added to the total claims. And then we have commission on direct business, which is 1,50,000. We have commission on reinsurance accepted, which is 11,000, and less commission on reinsurance ceded, which is 14,000. So the total here comes to 1 lakh 47. The total commission is 1 lakh 47,000. And finally, we have the operating expenses. Since we have operating expenses related to insurance business, we need to take those expenses. So the expenses are salaries, which are 2,60,000. Then we have rent, rates, and taxes, which is 18,000. Printing and stationery, which is 23,000. Like I said, provision for tax doesn't come here, it comes as a separate item. Then we have interest, dividend, and rent received. This is an income, so this can't come here, operating, but this will come in the revenue account as a separate item. Then we have income tax deducted at source, that's all connected. We have legal expenses. Now, out of 60,000, which is the total of legal expenses, we have already shown 20,000, which are directly connected to the claim. So the remaining legal expenses that we need to show are 40,000. And I think we just have one more item, which is bad debts. Yeah, we have bad debts, which are 5,000. Bad debts, which are 5,000. So the total here comes to the total of this comes to 3,46,000. 3,46,000. Now what we need to do is just transfer our items. So the first thing that we start with is premium earned, okay, which is schedule 1, and the premium earned is 25 lakhs 21 7 sorry 25 lakhs 21 750. 25 lakhs 21 750. Now mind you, there is another item which is that interest, okay, which is that interest. And why are we taking it here? Because they've said all these are related to marine insurance business. So how much is that interest? That interest is basically, it is interest dividend, rent, and in bracket put it as gross, not brackets, and then show the total amount. The amount is 91,000 plus 24, 91,000 plus 24, 500. Why are we showing, why are we adding the tax deducted even though they are not receiving it? Because actually that is the total income. This exemption for tax they will get when they are actually paying their tax and filing their returns. But when you are showing it as an income, you have to show the total because the interest is not only 91,000, it's 91 plus the tax that has been deducted. So that total comes to 11, sorry, 1,15,500. Okay. Similarly, we have that double income tax refund, double income tax refund, which is 12,000. And we have another item which is profit on sale of motor car, which is 5,000. So this is going to give me my total of A. The total income here is 26 lakhs 54,250. Okay. If that statement was not there that everything is related to marine insurance business, I would have taken all this in the profit and loss account and shown it as an income. If nothing is mentioned, then you have to make an assumption whether it's related or not related, and then make a small write a small statement below the problem that you have assumed it to be related or not related. So we start with claims incurred. Next one, schedule 2. Total claims are 17 lakhs 81,000. Then we have commission, schedule 3, which is 1,47,000. And finally, operating expenses related to marine insurance business. The total of operating expenses are 3,46,000. So this total comes to 22 lakhs 74,000. 22,74,000. We call this total of B. We call this a total of. From this we get our operating profit from marine insurance business. If you don't know what insurance business it is, just say from insurance business. But here they mention it's marine. How do we get this? A minus B. That is equal to 3,80,250. 3,80,250. So finish the profit and loss account. So we have operating profit from marine insurance business, which is 380,250. We call this total of A again. We don't have any other income to show here. 380,250. Next, we would normally have any expenses, any other expenses. Now, why I'm writing this is just to show, stick to the format. We don't have anything here. Okay, so I'm going to call this as total of B. Total of B again is nil. Total of B is nil. So basically net profit before tax, net profit before tax is A minus B. So A is 382.50. We have nothing in B, so it's going to be 382.50. We have a provision for taxation, less provision for taxation, and the provision for taxation is 2,40,000. The provision for taxation is 2,40,000. Then we have profit. This gives us our profit before appropriation, which is 380 minus 240 gives us 14025. Okay. Then we normally have any appropriations. We don't have anything, but just to stick to the format, I'm writing this. We don't have any appropriations. So we say net profit for the year is 14250. Then we normally have add balance profit brought forward, profit brought forward. Again, we have nothing here. That is last year's profit and loss account. So the balance carried over to the balance sheet. 14025. That is the final answer. So basically, we hardly had anything in the profit and loss account besides the provision for taxation, but I still maintain the format. Okay, it's good to maintain the format, the broad format. Is this clear?